All right, so let's jump into the world of insurance and finance today. We're going to unpack Cincinnati Financial's Q3 2024 earnings call. We've got their official transcript, of course, some interesting stock market news analysts reports and all that good financial data. What we really want to know is Cincinnati Financial still a solid bet for investors?
Yeah, well, what's really interesting is that despite, a volatile market, Cincinnati Financial actually beat revenue expectations for this last quarter.
Oh, wow.
Their stock price jumped up over 2% actually after the earnings call on October 25th.
Okay, that's definitely good news. 2% is nothing to scoff at. But wait a second, the earnings call transcript also mentioned Hurricane Helene.
Right.
What kind of impact did that have on their performance?
Helene was definitely a curveball. It caused a lot of damage and unfortunately did have an impact on Cincinnati Financial's bottom line. Those catastrophe losses can really add up.
Yeah, for sure.
But they are known for their commitment to helping their policyholders during those tough times.
Yeah, that's good to hear. It speaks to their values as a company. But let's switch gears to some more positive news. The transcript also highlighted some pretty impressive premium growth.
Yes.
Especially in their property and casualty lines. A 17% increase for the quarter.
Absolutely. And it's not just renewals driving that growth. They're also attracting a lot of new business, too, which suggests that their strategy of focusing on agencies and building those relationships is really working.
Yeah, that's a smart approach.
Yep.
So tell me more about this commercial casualty segment.
Sure.
I know they're seeing some strong premium growth there, too, but it sounded like the reserve development isn't quite what you'd expect. Can you explain what that all means?
Okay, so favorable reserve development basically means that the company initially sets aside more money than they actually need to cover claims.
Okay.
And so when they release those extra reserves, it boosts their profits.
Gotcha.
So in this case, we're not seeing as much favorable development in commercial casualty. And that's likely due to, the current environment with inflation and rising litigation costs, which are creating some uncertainty.
Yeah.
Cincinnati Financial is known for being pretty conservative in their approach.
Mm-hmm.
And it seems that they're taking a cautious approach with their reserves in this segment.
Makes sense. It's better to be safe than sorry, especially with all the economic uncertainty in the air.
Right.
Speaking of uncertainty, there was one move that really caught my eye.
What's that?
Their decision to sell off part of their equity portfolio.
Yeah.
What's going on there? Are they shifting their investment strategy?
It's a great question, and it definitely caught the attention of analysts. But Cincinnati Financial emphasized that it was just a rebalancing act, not a fundamental change. They're still committed to holding on to a significant amount of equities for that long-term growth.
Right.
They just saw an opportunity to capitalize on a strong market and reinvest those funds.
Makes sense.
Likely in fixed income, given the recent rise in interest rates.
Smart move.
Oh.
Okay, now let's talk about their E&S segment.
Okay.
Or excess and surplus lines, for those who don't know.
Right.
It's been growing like crazy, but also seems to have hit some unfavorable reserve development. Is this a cause for concern?
Well, while rapid growth can sometimes lead to a few hiccups along the way, Cincinnati Financial's E&S segment has historically been quite profitable.
Okay.
It's important to note that they're primarily focused on casualty within this segment,
right,
which, as we talked about earlier, is facing some of those industry-wide pressures. So it's definitely something to keep an eye on, but I wouldn't say it's a red flag just yet.
All right, good to know. So I'm getting this sense of cautious optimism here. Now, the transcript also mentioned something about a generational opportunity in personal lines.
Oh, yeah.
What's the story there?
They're really optimistic about personal lines right now.
Okay.
They attribute that optimism to a few different factors. One, the increasing impact of severe weather events, which we've seen a lot of lately.
Yeah.
Two, the evolving landscape of traditional competitors. And three, their own strong financial position. They're also benefiting from offering both middle market and high net worth personal lines products through their agency network, which provides a nice level of diversification.
So it sounds like they're in a good spot to capitalize on all of this.
Absolutely.
But before we get too excited, let's not forget the heart of the insurance industry.
Relationships.
Exactly. The transcript emphasized Cincinnati Financial's strong ties with their independent agents. What are they doing to nurture those relationships and keep growing that distribution network?
Well, their local fast fare philosophy really stands out.
Okay.
They handle business locally whenever possible, empower their agents, and provide quick, reliable service.
Sounds good.
They're also strategically expanding their agency network, but they're focused on quality over quantity.
Right.
They look for agencies that share their values and are committed to building long-term partnerships.
So focusing on sustainable growth, nurturing those vital partnerships, and navigating this crazy market. What's the big picture here? What are the key takeaways from this earnings call, and what should investors be watching closely in the coming quarters?
Well, the bottom line is that Cincinnati Financial is showing a lot of resilience in a tough environment. They're growing those premiums, maintaining those strong agent relationships, and taking a proactive approach to managing risk. However, they're not immune to the pressures that are impacting the whole industry.
Right.
Those rising catastrophe losses from events like Hurricane Helen and the uncertainty in certain lines of business, like commercial casualty, are definitely things to keep a close eye on.
Great points. Now, before we wrap up this part of our deep dive, I want to leave our listeners with something to think about. A question that wasn't explicitly addressed in all this material.
Okay, I like it. Go ahead.
With their strong emphasis on growth, can Cincinnati Financial maintain those historically conservative underwriting and reserving practices? It's a tough balance to strike, and it'll be interesting to see how they manage it in the coming quarters. Now, that is definitely food for thought. This has been a great start to our deep dive, but we've only scratched the surface.
You know, while we're talking about managing risk, one thing that really stood out to me in the earnings call transcript was this focus on pricing sophistication and segmentation.
Yeah, they mentioned that a few times. What exactly does that mean for everyday policyholders, though?
Yeah. So basically, they're not just using, gut instinct or broad industry averages to set premiums. They're really leaning into all this data and these advanced modeling techniques to assess risk at a very granular level.
Okay.
You can think of it as almost like they're looking at each individual policyholder to figure out the pricing.
That makes sense in such a crazy market.
Yeah.
But I'm curious, how does this affect their relationships with those independent agents we talked about?
Right.
Are agents comfortable with this approach?
That's a great question, and it's something that Cincinnati Financial has been really proactive about. They've put a lot of resources into training and communication to make sure their agents really understand how these models work and how they benefit both the company and the policyholder.
So it's not just about some algorithm in a black box.
No.
They're actually bringing their agents along for the ride.
Absolutely. It's a really smart approach that combines that human touch and expertise with, the power of data.
I like it.
Yeah.
Blending tradition and innovation. Now let's talk about Hurricane Milton for a second. It hit Florida pretty hard in the fourth quarter, and Cincinnati Financial already estimated their losses to be somewhere between $75 million and $125 million.
Yeah, it's a big hit, no doubt. But it's important to remember that Cincinnati Financial has a really long history of weathering these kinds of catastrophic events. And they've got a really strong balance sheet so they can absorb these losses without putting their financial stability at risk.
Right. That's reassuring. And didn't they say a big chunk of those losses are coming from Cincinnati REIT, their real estate subsidiary?
Exactly. That just goes to show how important their diversification strategy is. By not putting all their eggs in one basket, they're better able to manage that volatility and keep things running smoothly.
Diversification, always a good thing. Speaking of which, let's circle back to their investment portfolio. They made some headlines with that sale of equities, but they were very clear that it wasn't a strategic shift, just rebalancing.
Right. And what's interesting to me is that this move actually really highlights their long-term investment philosophy. They're not chasing those short-term gains or reacting emotionally to the market. They're sticking to their plan, which has worked well for them historically.
They're playing the long game.
Yeah, exactly.
Okay, now I want to go back to something you mentioned earlier about their commitment to their agents. It seems like they really value those relationships.
Well, they absolutely do.
Yeah.
And they don't just talk the talk, they walk the walk. They provide lots of training and development opportunities for their agents. They offer competitive compensation and give their agents a lot of autonomy.
It's a true partnership then.
Exactly. And that's what sets them apart from a lot of other insurance companies. They really understand that their agents are their most valuable asset, and they treat them that way.
All right, so we've got a company that's financially sound, technologically savvy, and committed to their agents. What's not to like?
Well, like any company, they face challenges. The insurance industry is always changing, and there are lots of factors that are outside of their control.
Things like natural disasters, economic downturns, and changing regulations.
Exactly. But what's impressive about Cincinnati Financial is their ability to adapt to all of that without losing sight of their core values.
Right. They're not afraid to make tough decisions.
And they're always looking for ways to innovate and improve.
As we're talking, I'm realizing this earnings call wasn't just about their financial performance. It really gave us some insight into their culture, their vision, and their commitment to building long-term value.
It's like a behind-the-scenes look at a successful company.
Exactly.
Yeah.
So let's talk about the competitive landscape for a minute. Cincinnati Financial operates in a crowded market. How do they stand out?
It's true, but they've really carved out a niche for themselves. They're not trying to be everything to everyone. They focus on a specific type of customer, and they build those incredibly strong relationships with their agents.
Specialization is key.
Exactly. They found their sweet spot, and it's working for them.
Okay, so they have a solid track record, strong financials, dedicated employees, and a unique value proposition.
Yeah.
What about the future, though? What are some of the biggest trends and challenges that could impact Cincinnati Financial's growth in the years to come?
That's the million-dollar question.
It really is. We've covered a lot in this deep dive,
We have.
but there's always more to learn.
Absolutely. And that's what makes investing so interesting. It's all about learning, adapting, and looking for new opportunities.
I think our listeners are ready to do their own research and make informed decisions now.
Yeah, we've given them a lot to think about,
Remember, knowledge is power,
especially when it comes to investing.
but knowledge is just the first step. You have to know how to use it.
So go out there and put your knowledge to work.
And join us for part 3, where we'll wrap up our deep dive into Cincinnati Financial's earnings call with some final thoughts and takeaways. Until then, happy investing. So we've talked about, Cincinnati Financial's performance, their strategies, the challenges they face, but let's take a step back for a second and think about the bigger picture here.
Okay.
What are some of the key trends that could really shake things up for the entire insurance industry? And, how is Cincinnati Financial positioned to deal with all of that?
Well, one trend that you just can't ignore is the increasing frequency and severity of these natural disasters.
Yeah, it seems like we're seeing more and more of them lately. Hurricanes, wildfires, floods, they're causing billions of dollars in damage. And it feels like it's only going to get worse with climate change.
Yeah.
So how is Cincinnati Financial preparing for this?
Well, they're taking a multi-pronged approach.
Okay.
And it's not just about paying out claims after a disaster happens.
Right.
They're refining their risk models, those calculations and algorithms they use to assess risk. And they're adjusting their underwriting guidelines to reflect this new reality.
So being proactive.
Exactly. And they're also investing in mitigation efforts to try to minimize the impact of these events before they even happen.
Okay, that makes sense. Now let's switch gears for a minute and talk about technology. It's transforming pretty much every industry, and insurance is no exception. What kind of tech advancements are we seeing in the insurance world, and how is Cincinnati Financial embracing all of this?
Oh, it's a really exciting time to be in insurance tech. We're seeing things like artificial intelligence, machine learning, cloud computing.
Wow.
All these tools that can help automate tasks, analyze tons of data, and even personalize the interactions with agents and policyholders. And Cincinnati Financial is definitely investing in all of this.
Okay.
They're using these cutting-edge technologies to become more efficient, improve their customer experience, and gain a competitive edge.
So they're not just keeping up with the times, they're trying to stay ahead of the curve. Now, before we wrap up this deep dive, I want to address the elephant in the room, the thing that I think is on everyone's mind, the possibility of a recession.
Yeah.
That could have a real impact on the insurance industry, right?
Absolutely. During a recession, people tend to cut back on spending, and that includes things like insurance premiums.
And businesses might reduce their coverage or even go out of business altogether.
Exactly. It's a ripple effect.
Yeah.
So how is Cincinnati Financial preparing for this?
Right.
Well, remember, they have that strong balance sheet we talked about and a really conservative approach to underwriting. So they're not taking on too much risk, which should help them weather the storm. They're also very focused on maintaining a diverse portfolio, both in terms of their lines of business and the geographic regions they operate in.
So they're not too exposed to any one area.
Exactly. Spread the risk, diversify.
Makes sense.
Yeah.
Well, I think we've covered just about everything in this deep dive.
We've gone pretty deep.
We've analyzed their financials, dug into their strategies, and even talked about their future.
Yeah.
I think our listeners are walking away with a really solid understanding of Cincinnati Financial, and they're well equipped to do their own research and make those informed decisions.
Absolutely.
Remember, investing is a journey, not a destination.
Right.
It's all about constantly learning, adapting, and being on the lookout for new opportunities.
Couldn't have said it better myself.
So stay curious, stay informed, and you'll be on the path to success.
Great advice.
And to all of our listeners out there, thank you so much for joining us on this deep dive into Cincinnati Financial.
It's been a pleasure.
We'll catch you next time on the Deep Dive. Until then, happy investing.